Welcome to this week's episode of The Capitalist Investor. We are missing one squadman, that is Derek Gabrielson. We've got Ryan, Tony, and Luke. What's up, guys?
What's going on?
So this week we got some interesting things, as always, for you guys. But before we get into the craziness, I just wanted to say that we're going to try to keep these episodes a little bit shorter. You know, we want to make sure that everyone listening to this on their way, to work is able to get the full episode in, or maybe on their commute home from work is able to get the full episode in. So we're going to try to keep these around 20 minutes now rather than 30.
Yeah. People like to listen. Back when it was a work from home society, they said, hey, bring on the 2-hour, 3-hour episodes.
Right.
But now people have to go back to the workplace.
People are going back to work.
Yeah. Otherwise they lose the jobs.
All right. Yeah. So so what I'm going to do is I got my phone out here. We're going to do every 7 minutes, the ringer's going to go off. That means we got 60 seconds to wrap it up. That topic, and then we'll move on to the next.
I like it.
That?
I like it.
Let's see if we can.
Ready to rock and roll.
All right.
So before we deep dive into each one, we've got inflation and the Fed, the latest updates on there. We've got the job market, unemployment, and tech layoffs. Every week seems to be more layoffs and more unemployment within the tech sector. So we're going to focus on that. And then we got a couple canceled topics that we're going to kind of hit on very quickly, but one is around your money and taxes, which everybody cares about and everybody should care about. So let's deep dive into inflation and the Fed, guys. What's going on there?
CPI's coming out this week.
Yeah, big data point.
It's a monthly thing, right? Last November's was 7.1. They're expecting a 6.6, so it's going down. But Ryan and I were talking, and it was one of the bigger, like 9 or 10% data points is falling off the books,
right?
But if we're looking month over month, they're expecting it to be flat. So here we go with the stickiness is what I assume.
Well, I don't know when the stock market's going to learn, because the stock market gets excited that the Federal Reserve is going to pivot because of, inflation maybe isn't at 8.5% anymore, but it's at 7%. For some reason, the stock market thinks they're going to pivot, and then all of a sudden, every month when Powell does a speech, they find out that they were wrong. So I don't know how much longer this is going to go on for, guys. The one other key thing I wanted to hit on real quick is the only people, there's a lot of people out there, the retail traders, retail investors that think there's going to be a pivot, have been traders and investors only the past 13 years when interest rates were 0%. Right?
Right.
So they a lot of the younger folk, 20, 30, 40-year-old investor that hasn't been doing this through multiple cycles think they're going to be pivot compared to the older investors out there. And there's actually data out there that suggests that that's what's happening.
Right.
Well, a couple Fed guys came out and said, like, hey, our terminal rate is going to be somewhere between 5.25, 5.5. Somewhere in that ballpark.
Kind of big news too, every time, and it's a recurring theme. Like, they keep saying, hey, don't, people are pricing in a cut next year, some people, and it's amazing to me because, I think they'll come to a terminal point and stop with the, bumps. But I mean, I don't see anything that's going to forecast a cut next year. Do you?
No, because I'll just reiterate what Powell has said before. They want a 2% inflation rate. We're at 6.5. Like, it's a long leap, right, to get there. Projections 5 years out are at 2.5%. So, are they going to keep their terminal rate of 5.5 for 5 years? I mean, so start piecing this stuff together, and at the end of the day, what I think my prediction will be is that they need inflation to be below the federal funds rate. And when they see the destruction that they've done when they're at 5 and inflation's getting down to like 3.5 or 4, that will be the pivot point. I don't think we'll see it in 2023, but early 2024 when I'll call it destruction of just kind of growth. Is it complete destruction crumbles? No, but
right.
Just a slowing economy to maybe even a couple negative GDP quarters. I think that was what is going to need to happen for them to quote unquote pivot and actually get into what I would feel like. I think the pivot's going to be quick and then go into quantitative easing right away.
Here's the other thing is this system doesn't work if there's not a belief in the system of working. Like the Federal Reserve, being there as a central bank to control rates, to control demand within the economy. If no one believes in that system, the Federal Reserve basically loses all control, and the market basically prices everything, by itself, which I think is how it should happen in the first place. But my point there is the Federal Reserve is willing to risk putting us into a recession, is willing to risk getting us below 2% inflation as quick as and as soon as possible, rather than lose their credibility like they've lost it, a year and a half ago, 2 years ago, when they didn't hike rates and said inflation was transitory.
Right.
So they need to build that credibility and trust again.
Is there a risk that they overshoot? So we were pretty
Yeah.
high. We were at 9%.
Absolutely.
No, on the other way. But so we were at 9%. If they were to begin cutting, and we've already come down to 6.5 potentially. Is there a risk that when they target 2, they could actually kill too much?
Yeah, the only way a cut will happen, in my opinion, is if you start to see defaults
Right.
from the consumer and defaults from the companies out there, right? Small businesses defaulting on their debt, technology companies over leverage themselves defaulting. If that starts to take a turn and you see that rise spike up, the Fed will think about it. Absolutely.
What about the other mandate? So we're framing it through inflation. What about, so they have a mandate to have full employment. We want as many people that are looking for jobs to have jobs. And so we have a huge discrepancy right now. There's tons of openings and not enough employees. So where does that become the issue? And when do they start? We're framing all these questions in terms of inflation.
Passing, didn't we talk about you felt like the posting for jobs is inflated?
Perhaps those numbers, I've come to rely less and less.
Explain what I mean. Just take a really quick
there's
dive into
conspiracy theories out there that people, multiple postings are counting. They're counting virtual postings that could be filled in New York or San Francisco or
so
whatever.
That counts as
multiple
3 jobs. Yeah.
Who knows if that's the case? But I mean, there is certainly a big a chasm between the amount of jobs available and the amount of people looking for those jobs, qualified for those jobs. So, I think there's quite a bit of burn off. That unemployment rate's going to have to tick up a little bit before it even becomes a focus with inflation being this high. So, is there a point though where an unemployment rate 5%, 6%, where you think the Fed starts paying a little bit more attention to the other mandate as opposed to just the inflation?
I think when we get to inflation around 4%, I think it's a little bit more palatable for the normal consumer, and that's when they start pivoting or stopping or whatever they're going to do. But I'm worried about negative GDP. I'm worried about recessions. If you tie two. We get into not these flash recession points, hey, we went negative for a quarter. Let's tie a couple quarters together, and then it'll really wake them up.
Let's go the complete opposite way. Everyone's talking about pivot. What if the complete opposite happens and the consumer is stronger than we all think, and there is no recession, and companies are stronger than we all think, and then the data suggests? What if we're wrong and they have to raise it to 7 or 8% on the Fed funds rate?
Well, that's one of the dangers they have to be considering, because in the 70s, we had a kind of a double inflation period. We got inflation under control for a short while, and then it sprung up really hard again towards the late 70s. And so I think that's one of the learning. You want to be Volcker. You don't want to be the guy that botched it. You want to be Powell, the worst Fed chair in the history of Fed chairs.
That's a hard. They're all really pretty bad.
No, I mean you can't let your foot off the throat. I mean, you got to stifle inflation because we have history of it bouncing back, and so that's probably the
that's
worst.
What Michael Burry is suggesting, the Big Short guy, one of the best shows in the world.
What's he?
Michael Burry suggesting that the Fed's going to hike too much, put us into a recession, and then essentially lower them back down to 0%. We're going to get a respike in inflation here in the next couple of years. So it's a prolonged 5 to 10 year issue that we're going to have.
I think they'll overcook it. I think they'll come back down. But I mean, if they're at 5, they can't go back. Going back to 0 would be bananas.
I brought up the jobs question because
I know. You're right.
One of the things that employees can do when their labor is in demand is they can request higher wages. One of the things that higher wages leads to is inflation. And so that's why I bring up, they have a dual mandate and they got to keep an eye on the two things. But we've talked about it strictly in the context of inflation. So there's that other piece of the puzzle. When does that become a bigger piece, bigger weighting in their calculus?
Well, to sum up inflation, we are not going to be done talking about this anytime soon. This is going to be a whole year kind of topic that we're going to have to hit on and give you updates on. But that is our 7 minutes. And we'll see what happens heading into 2023 if inflation does cool down or if we're sticky.
All right. And Ryan, hot take on the CPI Fed? Anything?
I'm always the cynic. Give me the over.
Give me the over.
Give me 15% chance. Give me the over.
I think how it affects the stock market has been bananas. As worse news comes out, the market rallies. So when we get bad news, does the market pivot?
We're in that weird place though, where it used to be the bad news is good news and the good news is bad news. It's like there's a little ambiguity on how you interpret these bad. Is it bad news? Is it actually bad news this time because we've come?
We started the season.
This is why I have a headache every single day.
All right.
All right. Next topic, we've got the job market, unemployment, and tech layoffs. Every single week, it seems like Amazon, Facebook, which is now Meta, whatever it is, Microsoft, Apple, all these tech companies continue to lay off workers, and it's starting to trickle down. You're starting to see even smaller companies laying off people. So, employers added 4.5 million jobs in 2022, showing that the labor market remained part of the strength, the strongest part of the economy, and everyone's still saying it's strong because we got 10.5 million jobs. What's happening in the tech sector, and what's the impact on the overall economy as we head into 2023?
For those of you listening at home and not watching, by the way, on the old YouTube channel, you did air quotes when you said added jobs. I mean, those are just like, we took those jobs away as a society 2 years ago, and I guess we can count it as added jobs, but it's really, jobs that have come back from government intervention.
I think so all of those topics I think are going to be addressed in this upcoming earnings season, right? And it kicks off this week with the banks.
Yep.
That's kind of the like as we worked on our topics this week, I went for like the banks always set it off because they're the ones with the money. They're dishing it out. They're accepting, new money. They're paying out interest rates, all of that jazz. So I think we're going to hear some as interest rates are high, you got the pros and the cons for the bank. How much are they getting squeezed?
Well, everything relies on the banks because the banks loan out money to these corporations. So it all goes back to whatever the banks are seeing. If they're seeing people taking on risks, taking out loans, that means the economy is doing pretty well. And, people might just be lightening up to add some margins to the bottom line to adjust for inflation. Or if people aren't taking out loans, if the loans aren't as strong, they are laying off people because they are extremely worried about the future.
I'm gonna rattle off. So there's gonna be pros and cons to the earnings seasons for banks that I thought of. Is some of the pros is all right, they're the loans are going up with as inflation is staying sticky. So margin, it's the great masking is what I'll call it, is when it was 2020, right, and interest rates were near zero. The bank was earning 0.5% on all money,
right?
And they were giving you, the consumer, 0.05%. So they were making 45 bips, 0.45%. They were making on that. Now they can mask it a little bit better. When they're getting 4%, they're making 4%, and they're giving you 3%. Now they're making 1%. So I think this arbitrage, as interest rates go up, they can mask how much they're making. So I think that's one of the pros.
They might have to, because if you start to see some people not being able to pay back their loans, they need to make it up somewhere else.
Right. They're able to make a lot of arbitrage because of that, us being well above zero again. Yeah. Now here's the cons. So as a big bank like JP Morgan, they do everything. Yep. So M&A demolished. Yep. I think it's back to 2008 levels.
Because the cost of borrowing went up.
Yeah, you can't. To buy a business that 4% was good. To buy it at 7, 8, 9% on the loan is rough, right?
And it's a good time if you're going to be acquiring. I mean, some market caps have been wiped out. There's better deals to be had, and so it's still pretty dry.
Yeah. Another thing, rate chasers. Hey, what's your savings account paying? 0.5%? I'm going to move all my money to this bank, right? So you got the rate chasers on just the stagnant money. Yep. Mortgage loans, those are crushed. They're not making any money on mortgage.
90% year over year.
Yeah, the mortgages are gone. And, the bigger banks who are just managing assets, managing portfolios, counts are down this last year. Right. They're down anywhere between 5 to 25%, depending on your risk level. Mm-hmm. So they got a big missing holes. That's why you're going to hear a lot of layoffs coming from, I think, the bigger banks.
Well, that's interesting that you say you're going to hear a lot of layoffs, because we've heard about a lot of layoffs, and we're going to talk about jobs too. Been kind of focused in the tech sector, so that's one question.
Well, tech was the most ever over leveraged, right? They were the one they're the sector that grew the most the past 13 years and hired the most people.
But if there's a speculation that financials, I mean, that's
my point is
you know,
that technology is not surprising. That was the first ball to drop.
Right.
But just wait, like you said, what you were referring to. Wait till financial ball starts to drop a little bit. Wait till discretionary, like, you know, like till hotels. You're already seeing cars, like, basically
Right.
down.
I saw that
90%.
number.
and,
like
and service and lead, you know, that was the bright spot. You know, that's like almost 1 million more jobs last year. So it's, you know, the trickle down effect.
The deflation in used cars is like 15%. I just saw that number somewhere. Like, so if you bought a car for 20 grand, it's worth 17 today.
Right.
And you've only had it a year, and good luck with that.
You
loan.
bought a car for 20 grand. What is that? Like a 2-door spec? I mean, you can't get a car for under 40 these days.
Anyway, so I don't know if it was Chase or whatnot. They said they're laying off like 3,000 or 4,000 people. They said that's the most since 2008.
Well,
2008 was a big financial bomb.
But look at what Jamie Dimon was saying about getting workers back to the office. I mean, obviously, there's always something in the back of people's heads to why they're here saying certain things. And the reason why Jamie Dimon said that people, if they whether they like it or not, they got to come back to the office. The reason they're saying that is he's seeing a productivity issue. He's seeing, you know, dollars not being added to the bottom line. He's seeing people
Disney
not being
just jumped on
productive
that.
to try to add dollars to the bottom line. So they're going to lay off workers.
Right.
Because, I mean, the first step is saying, come back to the office. I see some issues. Second step is you can't produce anyway because the economy's bad. You're laid off.
Right.
Or your bonus is smaller. So go somewhere else, whether you like it or not.
All right. Any final things on earnings this year?
No, I'm excited. It felt like it was too long without,
Well,
you know.
I think this is going to
earnings
be
to
a
look at.
recurring topic for our viewers to expect over the next probably month or so. We're entering earnings season. So, you know, we're probably going to be coming up with, you know, our hot takes depending on who's reporting that week.
Yeah.
You know, technology, staples, you know, energy. Whoever's reporting will report back what our thoughts are and the impact on the overall economy and what it says. Because really, Q1 and Q2 of this year, earnings reports are going to be probably the most important earnings reports we've seen since COVID.
Yeah.
And figure out what sectors, you know, make the most sense. You know, so we'll figure all that stuff out. All right. I think that we had 2 cancels. That
We got one quick one and one longer one.
Let's go.
Let's go with the quick one first. Bernie Kosar is canceled.
Yeah.
Because he bet $19,000. Since back a little bit of background, if you didn't know, sports betting is now legalized in Ohio. Everyone's running around with their chickens with their heads cut off, you know, going crazy.
Even more background. Bernie Kosar was a famous Browns quarterback from the 80s, for those that don't know. And so he is also the play-by-play man he does radio for the Browns.
Yep.
Not play-by-play. Yeah. It's, you know, the executive producer's shaking my head because he's a super Browns radio fan over there.
But
Sorry,
but he's just the mascot of the Browns,
So
the best, one of the better players that we've ever had. You know?
So 1 minute after, well, actually, one person placed a bet before Bernie, but Bernie was the first one to bet legally in Cleveland, Ohio, and he bet his number was 19, bet $19,000 on the Browns to beat the Steelers. Probably should have been fired for that bet, right, Mr. Steelers fan?
That's right. I mean, that was a bad take in the first place.
It was going to go to charity, but, you know, in the contract, when you're affiliated with an NFL franchise, they don't like you gambling on the team.
Yeah.
You know, the whole Pete Rose thing, you know.
So like there was another player earlier this year, Calvin Ridley. So it's fantasy football players out there. Yep. He got dinged up. He bet $1,500 over like 5 days or something, and he's never.
Yep.
He
didn't play last year.
Before. He didn't play this last year because they said it like ruins the integrity of the game. He was even off the team. Like if you read the article, like what he was doing, he took like a week off for mental health.
Right.
And in that week, he decided to start, you know, gambling.
Doesn't sound like doesn't seem like a mental health solution to gamble.
At the end of the day, I can get it. Like read your contracts. If you're a sport athlete, don't gamble. You're making a lot of money. Like don't jeopardize that. And you're right, man. And I think it ruins the integrity of the game.
And so it was kind of funny because he showed up to work against, you know, the Steelers game. And they're like, nah, you know, you can go home. You were on the news at 12:01 a.m. as soon as gambling was legal, betting on the Browns. So that's to an extreme. The first person to bet in Ohio legally, and this doesn't help the Hall of Fame case, Pete Rose bet on the Reds to win the World Series.
I know
Okay.
that was the ultimate, right?
Yeah.
The sports betting thing, like
Yeah.
just
Yeah. So
poor man will never make it to the Hall of
I
Fame.
guess he needs a buck, but
Yeah.
Well, Bernie Kosar is canceled. We'll see what happens with him next, whether he
Right.
gets his job
I'm
back.
I'm
or
much more excited about canceled number 2.
Whether-
Hit
yeah,
us
let's
with
go.
the-
Whether-
yeah,
whether-
come on,
whether-
let's
I
go.
don't care about gambling. Let's go. This is a good one. Let's go.
All right, he's
mean, I
ready to
do
rock
care.
and roll.
All right.
We've
Yeah.
got taxes, guys. We've got tax
Canceling
code.
taxes
We've got
is my
tax code changes. Apparently, income taxes are being canceled.
Yeah. I'm
Income
holding my
taxes-
breath on that one.
IRS
The House-
is being
Yeah.
canceled.
The House of Representatives, with the Republican now majority, is trying to basically abolish IRS, which means that they're trying to get rid of income taxes and make it more of a consumption sales tax.
It's
You
still
know,
a tax. It's still an income. Well, maybe not an income tax, but like we all buy
It's
stuff.
a consumption tax. It's,
an
what
out-
you're
it's an
buying.
outcome, it's the outflow tax, really. So like an income tax is penalizing you and disincentivizing you from earning
Now let's
and working.
Let's preface this by saying that this most likely will not go through. The
Yeah. Oh
Senate,
yeah.
Oh well, yeah.
and will not likely
It'll
go
get
through.
veto-
But
it'll get vetoed like on the presidency.
I
It
think
was
it's
said
important
before
to
it hit the
discuss.
water,
I think
yeah.
this is important to discuss because these are conversations that are going to come up in these next couple decades that could completely change the tax code. And my first thought is I'm okay with this. I like a consumption tax. I think a consumption tax, we have a spending problem here in America. We have a spending problem from the government, and consumers live outside of their means. They have since rates were 0%, borrowing was so accessible. We have a spending problem. When you are charged more for spending, you charge more sales tax, you're incentivized less to spend money on goods that you probably don't need, and more incentivized to invest, which means
Love
you get rid
that
of the Social
point.
Security system. You can invest more money your personal self. You are in control of your
we
destiny.
are a nation of spenders, not savers.
Yeah.
My take is that like that money's gone, so it will have an immediate impact on GDP because we're going to go out and buy more stuff because hey, guess what? There's more money in my checking account. Now I'm going to upgrade my
gonna
house,
cost
my
you
car,
more,
my clothes,
though.
my whatever. You know,
Okay.
that's what I'm just putting my mindset into whatever. But my head started going in a couple places. Like, why would they do this? All right, so I got a couple things here. So in 2020, the IRS collected $3.5 trillion of taxable revenue.
Yep.
If they switch to 15% across the board, I did the math. There's 125 million households in the United States, and they spend roughly, on average, $5,500. So let's just call it 60 grand. That now makes their collection of tax money at 7 trillion. If they keep up the spending, because that's the math. So now they're doubling their tax revenue by doing this. Then I'm like, well, then what happens to, if everyone's paying 15%, what happens to state tax? What happens to local tax, FICA? Like, so they talked about stripping things out. Then my mind is like, who's this going to help and who's this going to hurt? And if you're making 200 grand a year as a married filing couple, your effective tax, your average federal tax is 15%. But then when you tack on FICA, state, and local, you're paying 25%. If you're making 50 grand a year, you're paying 5% federal tax. So what is this 15%? Like, is it all encompassing? Like the state's going to get their piece and local's going to get their piece, or is it going to be 15 flat on the federal level, a consumptions tax? Then the state's going to get theirs. So now we're back to where we were.
Well, the
Like, how does this
implementation,
work?
and moving from what we currently have to what this proposes, and this isn't the first time. So,
Yeah.
Herman Cain had the 999, rest in peace, Herman Cain. But, there's been flat tax, there's been consumption tax. It's not the first time the idea has been floated. But one of the big issues is how do you move from such a radically different tax, thing into a consumption-based or value-added, rubric. And so that's the $7 trillion question. I don't know, but
Well, the one thing you didn't hit on, Tony, is those that pay the majority of the taxes are the top couple percent, right? They pay the majority of tax revenue. So therefore, their consumption,
some
if they
state,
have, if they're
yeah.
taxed less per se, and they're taxed on their consumption, that money will trickle down. In
Right.
my opinion,
The trickle
so
down
the
will
the
definitely
cost
happen.
of the consumer will actually go lower. So the cost of goods, there's going to be a deflationary effect to that. There might be an inflationary effect with more money in your pocket initially, but long term there's going to be a deflationary effect, which is going to help lower middle class. So this could be a huge, deep
yeah,
conversation.
So what did so they pulled Trump's tax record? How much did he pay in tax?
Well, he had a massive
I know,
carry
it's like-
forward loss from. I mean, like, and also, so there's
What happens to? There you go, man. Like,
Yeah.
what happens to the carry forwards? What happens to your cap
Well,
gains?
what happens
Well,
to
a lot of-
how are cap gains taxed? By the way, is that I mean, if we're going to go to a
Right.
simplified tax
I mean,
code, is that a
there's-
different
it's so
tax?
complex
Yeah.
on them getting their money. Like now, do all of your investments have no taxes? Like I can take money out of my traditional IRA and pay no tax because if I do, I'm just going to pay it to this when I go and buy something.
So generally, in the past, there's it's split a little bit. It's not federal income tax goes away. It's like everyone pays a flat rate. So
Right.
Forbes used to have 10%. Herman Cain was 9%. And usually it's a high single digit or low double digit number in addition to federal sales tax. And then property taxes can vary. You know, you got to average that out too because some people pay much more than others. So, you know, it's a great question. We don't think it's going to go anywhere now, but if you, I mean, it's a recurring
I'm
talking
going to
point.
say this: taxation is theft outside of government defense spending.
Yeah.
So whether or not, however, we get tax revenue down or make the government smaller or make it more efficient, is I'm okay with.
I mean, if there's a red wave in the House, the Senate, and the presidency one day, could they just push this through? And then we do have something like that. I don't know, but
They could. I mean, and so the changes made to Congress over the last decade. I mean, you used to be able to put you throw a wrench in the works if you had at least 40 people on your minority party side, but they kind of blew up the old filibuster rules, and so you could potentially a lot of the omnibus spending from the last decade, like you just needed a simple majority.
What?
Yeah.
right. I like the simplicity of the idea. I think it's like too.
But are we too complex?
We're too
Yeah.
complex to unwind that.
Right.
To be honest.
Well,
with
the
you.
government likes making things complex, so that way people that are able to hire a lot of really good people are able to figure things out, and the people that aren't able to hire a lot of good people or don't need to.
This is
other
too
ones get
simple
screwed
for
over.
the
So
gov-
therefore,
yeah.
the middle class gets screwed over like they always do. So
Yeah, I mean, I always felt like the highest earners do pay the highest tax, but what's their actual payout? Like they're on a percentage wise, and I'm thinking there's going to be immediate destruction in the lower middle class because they're not paying 15%.
Yeah, their income tax is already gone. So 45% of America,
they're getting
40
taxed
to
at
45
10 or
no, they don't pay
0.
40 to 45 don't pay taxes. So it's 55% of the public is paying the taxes for 100% of the people.
Yeah.
So it's
That's
like
a problem
they
within
already
itself.
have a zero income tax. So now you're talking about extending. And again, it probably would never be 0%, but now you're talking about extending a lower tax rate to the upper and middle and upper too.
Yeah, I mean, maybe if you make over a certain amount, everyone's paying 10, but if you're making over X, you're paying 20. I don't.
we could come up with a lot of hypotheticals.
Oh.
I think we could
But anyway,
we
it's
could
not
talk
gonna
for
happen,
hours about this.
Yeah.
I think we should actually continue this conversation and debate this conversation maybe next week or the week after.
Yeah.
But that being said, we are already over time. We've already screwed up our new structure, but we appreciate everybody tuning in as always. We have some new things we're going to be trying out here probably the next couple months, so keep an ear out for those new things we're going to be trying to implement for you guys, because at the end of the day, we want you guys to get the most up-to-date, best information that you can. We appreciate you guys tuning in.
Or an eye out.
Eye out.
If you're
If you're on
if
YouTube,
you're on YouTube,
Subscribe
yeah.
wherever you like. If you like to watch it, you like to listen.
Yeah.
Subscribe, tell your friends and family, and we'll try not to bore you guys. Or if you need help going to sleep, we can bore you to sleep.
Or send us
whatever.
the topics you want to hear about. So
Yeah, absolutely.
All right. See you guys next week. Thanks for tuning in to The Capitalist Investor.